Okay, good evening, everybody. Let me check again. Is the sound level okay? Excellent. Well, thank you for coming. My name's Ed Carter, for those of you who don't know. I see some names I don't recognize there. So, welcome. I'm going to go through, well, let me just see if I can't give our agenda here. I'm going to go through some slides tonight that are basically going to help you plan a trade and then trade your plan. And specifically, we'll go through 4 charts and plan out 4 trades. I'll do a very quick review of what the trade plan will look like in version 2 of TraderVision. If you came for a demo and you thought you were going to get a demo, sorry, but that's not going to happen. And so it just is what it is. Then I'll answer some questions and we'll go from there. Let's go ahead and kick things off here. So the first thing you need to know is, in order to plan a trade, you need to have standards. You need to have objectives or goals to plan to. And so we need to have some SMART goals. And these goals will help tell you when to pass on a trade, help you plan the trade correctly, help you decide how to manage that trade once you're in it, and then allow you to keep taking pressure off because you planned your trade well to achieve your goals. And that sounds esoteric if you don't know what I'm talking about or if you haven't used version 1 of TraderVision. So let me show you what I'm talking about. I just did an example here to make it very easy. I used some straightforward numbers. $100,000 account with $120,000 goal within a year. That's 20% gain, which is about 1.53% per month. That seems very achievable, and that is a nice entry-level goal. The idea, of course, would be that you would get better and better and raise your goals each time that you go back around the process. So every few months, if you are achieving your goals on a regular basis, you want to increase that goal. But the goal isn't enough. What we need now is to know the parameters of our trading that will help us achieve that goal. And so just as an example here, let's just look at some numbers. I looked at an average win size of 300 bucks, average loss size of 150. Notice the 2-to-1 ratio. I just threw out there the number of 12 trades per month. That's 3 per week. And using a win ratio of 65%, in other words, you're winning 65% of your trades, you'll be able to achieve that 1.5% on the total account just doing those 12 trades per month. And the nice thing is that we can do that with trades that are only 3% of our account size. So if you do the math, even if they were all at the same time, you'd never have more than a third of your account in active trades. So that's that's pretty respectable. What do these numbers mean here? So 20% is 1.5%, or 1.5% per month basically. 3 trades a week is your 12. Average trade size of 3,000, or 3% of your account. So your average win is 300 bucks, which is a 10% win on a trade, and your average loss you want to keep at 5%. So this all puts us in good place to achieve our goals. These are all very straightforward and easily defined, and you can play with these numbers in TraderVision. Can I make 350 bucks per trade on a $3,000 trade? Well, that increases your probability, and maybe you could step back to a 62% win rate or something like that. But you play with those 4 variables and it allows you to achieve a plan that will meet your goals. So how does this goal help you? Well, the first thing it tells you is when I'm looking at charts and I come across something that doesn't give me the chance to make 300 bucks or a 10% gain, I just pass on the trade. It might be a chart, you might love it, it doesn't matter. If you can't make your goal, you need to pass on the trade. The job is not to have all of your money 100% invested at all times and take every trade that you come across. The job of a trader is to take good trades and take the least amount of risk possible to achieve your goals. So the first thing it tells you is if I can't make my 10% goal, I need to pass on the trade. The second thing you can find out from a chart is that now we know we need to keep our losses under $150. So if I've got to risk $500 in a setup, even if it's got a $1,000 upside, that's probably too much risk to take, and you need to pass. If you can't reconfigure that trade to lower the risk, you're taking more. You're taking more risk than you should. Sorry about that. Microsoft is giving me a hard time here, I guess. And the third thing that you can tell from the chart is if it's a setup that is not something that you have experience at winning, 2/3 of the time, you probably should pass. Don't take those risky setups. And the last thing this set of goals does for you is that as you're planning a trade and as you're managing a trade, you set the plan up to achieve that $300 profit as quickly as possible. And then when you're managing the trade, you lock it in as quickly as possible. That takes all the pressure off and puts you in a good position to succeed as you go forward in less emotions, less strain, because the truth of the matter is that in every trade, there's somebody out there that's trying to do bad things to you, that's trying to take your money. And the sad truth is that person is you. Your biggest enemy is always you. It's always your mistakes and your emotions that causes you the pain in trading. So giving yourself these parameters, these rules to work with just makes trading so much easier and so much more achievable. With that in mind, let's move on through. Well, Don, I don't know what to tell you about that. I guess I could go through it like this. Is this easier to see? Does that help? Okay. Well, I'm sorry that it was too small for you guys to see on the slide, but that's just the way it is. So for those of you who didn't catch what I was doing earlier, I'm just using a demo account here with a $100,000 balance, $120,000 goal. That's a 20% gain over a year. That's 1.5% per month, 1.53%. And then I played with the variables here. And I said I can average, and this is a new account, so I don't have any history to work off of here. If I had actual history, that would tell me what I've done there. So here I'm showing a 2-to-1, so a $300 gain per trade on average. That's 10%. $150 loss on average. That's 5% of that $3,000 trade. I just, you can play with these numbers. I can't do 12 a month. Well, then You know, if I knock it down to 10, now I need to either increase the average win size or I need to increase my ratio to get back to where my plan is going to achieve my goal. So it's one of those things where you have to play with these variables, and you can then come up with a plan that will meet your criteria. And I would recommend that you don't do more than 3% per trade, but you can play with this. You know, if you go with a higher number, you're going to have larger win size. It's much easier if you're making $3,500 trades. It's easier to make your $300 average gain, but that means you're taking $500 more risk per trade. So I would recommend you stay at 3%, but you have to play with those parameters to come up with something that works for you. So let's go on here then. So we're going to go through 4 charts that I had picked out today: PEI, CHK, Macys, and Con. So let's go through and look at those. First, let's look at PEI. On the off chance if that's too small, would I mind talking louder, please? Yes, I would. That's maxed out. That's as much volume as I can give you from my microphone on my end. That's all I can tell you. Anything more than that is really out of my hands. Let's look at PEI. So what we have here is a chart that I like. It's a rounded bottom breakout. You can see how we've got a nice construction of a bottom down here. And we are now making higher lows and higher highs. So we're trending. We broke above the 50. Let's just get this out of the way. We've got a support level here that was resistance before. And now today we broke out through. It looks like, to me, the next resistance level is up here about 1380 something, and then on up here about 1530 something. So let's just use those numbers and plan out a trade. The first thing is I don't want to chase this 6% up day. I'm looking for an inside day, a little bit of give back after this big breakout. If I don't get it, I don't take the trade. To this. You're going to tell me this is too small. Is this too small? You can't see it. Is that correct? I see that Al thinks I'm loud now. It's okay? Okay, well, excellent. Then I don't need to go back and forth between 3 different apps. I could use full screen, but that would be... Okay. Okay, well, this is what we're going to go with today. I don't want to keep changing here. This is a little bit bigger. Hopefully you can see this. On that chart, and that's why I don't like to do... On that chart, I'm looking for a 1250 entry, someplace in here. So I'm looking for a pullback off of this big run-up day. So I'm looking for a 1250 entry. What I'm telling me is that I've got a J-hook pattern, and that J-hook is within an RBB, and we've now broken out of that J-hook. My first target, I put 1380, which is a few cents less than that resistance line that I had drawn there. The second target is about 15.30, which again is a little bit, a few cents, nickel, less than that resistance level that I saw there. I used a 1203. Let's go over here. I used a 1203 stop, which is down below this line that is now acting as support. At least that's certainly my hope. And just for validation, V-stop says I could even have a higher stop, but I'm going to start out initially and use that support level to protect my stop, particularly since I'm looking for an inside day entry. So with those parameters, what does it tell me? Well, at my first target, I can get that 10% that I was looking for, but I can't get the $300 without making a much larger sale at that first level. So I'm going to plan this trade out to only take 250 at the first target, and let the last 100 shares run up to get that full 20, almost 22%. That's going to get me well within my parameters for reaching my goals. Worst case, I'm risking 4%, so I'm going to be below my loss. If you'll recall, my maximum loss was $150, so I'm going to be below that, even including commissions. And if I needed to sell everything to reach my goal, I only needed it to move to 13.55. So I think this is an excellent trade. It gives us about 2.5 to 1 reward to risk ratio, even to that first target, which is where TraderVision version 1 calculates to. So even to that first target, I can get 2.5 to 1. So PEI is a trade that I think you should look at, and you can see the process that I went through. I've looked at the maximum risk that I've got. I've looked at the reward that I can get. Does it reach my goals? I've looked at the reward to risk ratio. And all of these things match. I've got a good pattern that I know from past experience is going to get me more than 2/3 win rate. That's how I'm going to plan the trade. When I execute, I'm not going to second guess. I'm going to execute to this plan. The only time that I would, throw the plan out would be if there was a major market turn and the overall market turned against me. But that's not going to be the case 99% of the time. Okay, the second chart we want to look at here is Chesapeake. Yeah, OS, this is being recorded. The second chart we want to look at here is Chesapeake. You can see that we've broken this downtrend, that pink line. We've broken through the 50 here. You can see where I've got past risk and reward, support and resistance lines, I should say, drawn off of the chart. No, I didn't, Judy. TraderVision wouldn't let me. I bought 300, I sold 300. Okay? I apologize, I'm a little bit out of sorts today, guys, but I'm kind of dead tired and under a little bit of stress here. As I was showing you here, we've got a downtrend that we've been able to break. We've now broken above the 50, so that is an RBB. I'm not interested in it right here because I've got a potential resistance level just overhead. It was support back in here and back in there, and it was resistance there. So I'm not interested in it here. I'm interested on a breakout. That's where the money is anyway. We've got 13-14% up in here. So let's look at the plan that I put together. boy, let's try that again. So I'm looking at a purchase of about 15.15. This is a little bit, I'm using different parameters here than I did on that, did earlier. So it has a little bit different size on the position sizing. Yes, I would, Dennis, if I had looked at that. When I threw these together this afternoon or this evening, I didn't look at that. But if Chesapeake has earnings on 8.3, I'm going to pass on that. That's going to give me what? It gives you a week. That's probably going to be not enough for me. That's close. If I had over a week, I might take the trade, but I'm going to want to be out of it regardless before earnings. But just for the exercise of planning the trade, let's look at this. I had a stop at 495 and I had one target at that 582. So I'm doing all of my trade in between this breakout level and just selling just before we reach both the red line is the 200 simple and this resistance level. So that's where I'm going to be making my money. And my stop here is at 495, which gives support from here and from there as potential levels to protect my stop. Just for sanity's sake, V stop's pretty close at 485, so I'm within a dime. And that will move anyway because I'm not buying till up here. So this is something we'd have on the watch list and look for the breakout. With that plan, with 800 shares, I would make well more than my $300 profit goal that I'm trying to hit. And I'm only risking 4%, so I'm getting a little over 3 to 1. And that makes for a good trade. The next chart here is Macys. Excuse me. I have a frog in my throat. Another rounded bottom breakout. This one's on what I guess you could call a doji continuation pattern, or you might call it a doji sandwich. Depends on your terminology. But in either case, you can see that we've got a resistance level there that we're right up against now. And that's what I'm looking for the breakout. There's where our money's going to be. And this is a nice little setup. So let's go over here to M. If we buy just above this resistance level, we get our 10% in this first whack in this waterfall candle here. And then we've got some gravy up here up to fill the gap. So what does that plan look like? So we're looking at a 24.30, which is about 3 cents above that resistance. Purchase. $27 is the first place we're going to take any off, and then $28.60 is where we're going to take the rest of it off. Use the 23.30 initial stop. And just so that you can see where it's at, let me draw a line. So again, we're counting on the support from this level here to protect our stop. And that's fairly close to what V-stop says. V-stop would be on a 10-day, 1.5 times, about right there. So it would be just a touch below. Back and forth we go. So again, we've got that 10%. If I sold all 200 shares at that first resistance above, I'm going to make my goal for the trade. But I want to get a little bit greedy and get that second bite. So I'm going to sell half at that first target. That gives me $260 of the $300 I need. And then that last half, I can get the full 17%. So I'm really risking a little over 4% for almost 11% to the first target. And that's about 2.5 to 1, and that's a nice risk reward. And it fits my parameters very well. Con, I think this was one of Rick's. I know we've talked about it in the trading room several times. I know Doug liked it this afternoon as well. But it depends how you want to call it. You can call this a pop out of the box. You can call this a flag breakout. You can call this quasi J hook. Let me show you. Okay, so we're in con. Okay, so OS, since you're not familiar, this is kind of the standard way TraderVision works. There's multiple ways you can choose how you want to define how many shares to buy. My personal preference is to choose the max dollar loss to a stop. So I decide that I want to risk no more than $250 per trade between my entry and the stop. So that $250 then is going to define how many shares that I can buy. And I don't really want to do the math right here, but trust me, the math works. And I can show you that later. I know that I've got on the website, we've got videos under the tutorials page that go through this. But essentially, if I buy 240 shares with this stop, a $22 stop and a $23 entry price, that's going to, including then my commissions, that's going to give me $250 worth of risk for the trade. So that's how it comes up to that. Now in this case, with a $23 entry, which is just above this breakout, and I just arbitrarily picked a number, a nickel higher than where we were. Let's go back. A nickel higher than where we were. If we buy 200 shares, we don't even buy the full 240. We just buy 200 shares. We sell half of them at the first, just before this first resistance line. And you'll have to trust me, there's resistance over to the left. That's going to give me only 8.5%. So that's $200. Now I could, sell all 200 shares here, or at least more than 100 shares, and I could get my $300 here. And I might do that. But for this example, I'm just going to say that I think that it is likely we can make this second target, and so I'm going to be a little bit more aggressive, looking for that 20.5% on the second half of the trade. So I'll take my first $200, 2/3 of my goal, off, and that takes some pressure off, allows me to manage a little less overpoweringly, I guess, a little less emotionally on the second half of the trade. What it really says is I'm almost getting 2 to 1. I'm risking 4.5% to make almost 9%. But I could configure this by selling, I don't know what the number is, 150 shares. Let's knock this down. Yeah, if I sold 150 shares at that first target, I could get almost my full $300 here. Typically, what I do on my trading is I plan my trades. I choose my charts, I plan my trades, I set my entry criteria, what's going to trigger my entry. In this case, I want a positive move, so a nickel move here, and I'm going to set my orders. I'm going to say that I want it to, set a conditional order. And so I'm only going to buy above that price, or I can say I'm going to buy on a price opening below 2288, which is this high here, and then trading back up to whatever I said, 23 bucks. So I'll place that order like that at night, and in the same package I'll put in my targets and I'll put in my stop. And once I've analyzed the trade, no, Andy, I don't. I suppose you could, but that's just the cost of doing business. What was I saying? I guess the point is that I set my trades the night before. If I am trading during the day, I almost never trade the first half hour of the day because of just what you guys talked about. There's usually a lot of overnight orders that need to clear and extra volatility that first, 15, 20 minutes of the day. No, Bobby, I'm not. I don't use TC2000. I use TC2000 for charting, but I don't use them as a broker. I use Interactive Brokers, if that helps you. Rick, we'll look at that here in a moment. Trying to walk and chew gum at the same time, guys. I'm losing my mind tonight. At one point, I was making the point that if I refigured this and put 150 shares sold at that first target, I can get my 300 bucks, give or take $1.20. So I can get my 300 bucks off, and then that last 50 shares is really the pressure's off. Of course, I'm moving my stop up as we go. Sometimes be meta. Sometimes I do. That's that particular pattern. Let me go back to this chart. The rounded bottom breakout, which I really don't want to get into tonight, explaining the gist of the rounded bottom breakout, but essentially it's a pattern where price has fallen down through the 50, fallen away from the 50, and then established a bottom and is now broken back up through the 50. So the uptrend has started again. And so a lot of trades that I will take are a combination of the rounded bottom breakout pattern with also, I like, after it breaks through the 50, I like the first pullback after that. I'm showing to buy at 21. Do you mean 23, or are you talking about a different trade? Did you mean the con trade that I had the trade plan up for? Okay, so it says 23, not 21. And I'm placing a limit order with conditions attached to it. So in my case, I'll probably put in a condition order saying that I want it to be at 23 bucks, which is a nickel higher than it closed. That's okay. And, I might, in this case, since it's a breakout, I might say that I want to retest. So I want it to trade below 22.88 and then back up through 23 bucks. Commission's 55 bucks. If you're paying $55 for commissions, you need to get a different broker. That's incredible. That's like 1980s number. You can do it on several. Dennis, you can do that on several platforms, but I do it in Interactive Brokers. It's called conditional orders. Yeah, $55 a trade's just that's insane. Yeah, the latest round, there were several brokers that lowered their prices not too long ago, and I think even Toss lowered theirs to $4.95. You go rock bottom. The two lowest price commissions that I'm aware of is Interactive Brokers, right, where I'm paying $1, and I think TradeStation is essentially the same. So that's food for thought. But if you're paying $55, the first thing you need to do is find a different broker. Somebody back there said that my stop was too tight at $22. Right there's $22. It's down below these previous bodies, and that's really where I wanted to get. If you want to recalculate it, you think you need to make it looser, then do so. Remember that I'm looking on a slightly higher than where we're at now, so it's a little bit move up. So, it just is what it is. But right there's the $22 line. I'll put a line in here. Yeah, so that you can see the stop. When do I move my stop? Well, I guess when it makes sense. On this one, I've got support and resistance from over here. And so as we reach towards that, I'm going to move it up. If you need some sort of automated rule, if you need some sort of automated rule to help you in that regard, this volatility stop that Doug is the one that first brought it to my attention, but it's available from TC2000, and they got it from a third-party vendor, and I know that Thinkorswim has it now, but they basically give you these parameters, and it will trail for you. So you could set it at this level, 2141 or 42, and just move it every day. This final dot is not set until the end of the day, but you could just move it after the close every day, for example, as that dot moves. That would give you an automated way to do it. But what I tend to do is I tend to follow when we're reaching levels. So typically I'm going to get out or take a piece off about 38.2 on the extension of the run, and I'm going to be moving my stop in that time. Let me turn these back off. How did I screen for these stocks? Well, I have many scans that I use, but I tend to use, I think I mentioned this earlier, I tend to use the rounded bottom breakout pattern, which I have a scan for, and particular criteria of that rounded bottom breakout. I like it when I've got the 50 flat or having curled up. And then I also want to see a pullback within that or after the breakout up above the 50. So I'm looking for two patterns in one, and ideally then a buy signal to go on top of all that. So that's how I would scan for it. I have scans set up for different criteria, but the ones that I typically trade are rounded bottom breakouts and J hooks or PBOs, which is the same thing before it breaks out. And I'm looking for the first pullback after we break up through the 50. And you can see that that's the case in most of these cases. So if I'm buying up here, I think I said 515 if I recall, and up here on M, 2430 I think I said. All of these are rounded bottom breakouts, and ideally I would like to see a little pullback here after we've broken out. In this case, this is not a rounded bottom breakout. This is just either a pop out of the box. You could say that this is your box that we broke out of, or you can say that's a J hook, or you can say it's a flag. It's, in all cases, it's a nice run and then consolidation, and now we're moving again. That's essentially the pattern. So let's see. Any other questions here before I move on? How do I get the scanner? Do you mean how do you? It's the scans are written in TC2000, and the scans are my own. I've created them. There's a few in there that I've got from somebody else, like, or I've worked on something for somebody else. But most of those scans are my own, so I've written the code, and I share that with everybody in the trading room, and well, I give away most of my stuff. There are a couple packages that I have sold, but for the most part, I give away the stuff in the room. You can get it off of the website if you're a member of Hit and Run. All of the formulas that we use are there. I'm not the only one that shares them in the room. Doug and Rick, Steve, or 1973 Hog is what Steve goes by. We all share our work in the room. Don M. There are a lot of people in the room that share their work. That's the idea of the trading room. We're all helping each other get better. So in this case, typically, yeah, the scanner itself is part of TC2000. So it's that's just you buy the package, and the scanning engine is there. Then you just need to either get or write your own scan conditions, the criteria that you want it to scan for. And like I said, personally I do. Yeah, personally I just use TC2000. However, I can write in ThinkScript as well, and so I've converted, I don't know, half or more of the 1,000 scans that I've written. I've converted to Thinkorswim, and that code's available as well. It really depends on exactly what scans you're looking for, what criteria you're looking for. Most people, when they're new to trading, they'll, I want the scan to give me one trade. Well, that's not how it works. Scans are kind of like real estate agents. Their job is to get you in the right neighborhood. It's your job to go through a bunch of houses and pick out the one that's ideal. So that's how I look at scanning. But and I know that Doug, he has the ability to write scans and do some amazing things with the computer, but he just believes in using a watch list and going through all the charts. And that's how you get better, really, at identifying price action, identifying patterns, and identifying conditions that you want to trade. And that's by looking at tons and tons of charts. Yeah, I had not meant to get into things being general tonight, and so I apologize for that. But Let me see if I can't find. And like I said, I've got literally hundreds of scans that I've shared, and I've got thousands of scans on my hard drive of my computer. But yeah, here we go. I think this is what JQ was talking about. If you download that, that will give you, I think there's like 35 or 40 scans for candlestick signals in some particular patterns. And it gives them to you in English, and then it also gives you the code for TC2000 and the code for Thinkorswim. So OS, that may go a long way towards what you're talking about. But before you go out and just start throwing, a bunch of scans and start using them, you need to identify what setups you're looking for, and then focus on those scans that get you in that neighborhood. You don't want to just start throwing scans up. You can spend a whole lot of time and a whole lot of energy identifying stuff that really isn't in your wheelhouse, and you probably shouldn't be trading. But yeah, I would, and this was not meant to be a selling. You won't know how to use the scans. Well, I'm not sure what to tell you, OS. I can tell you that TC2000 is very intuitive. They have a lot of video tutorials. Thinkorswim has a ton of video tutorials as well. There are some instructions written in my book on how to enter scans, or in my book, on that booklet that I just posted there. And like I said, join the service, join the trading room, and we'll help you out. That's kind of the best that I can tell you. This isn't meant to be a scanning class tonight. Where was I? Okay, so we went through those 4 trades. The last thing that I wanted to do tonight is, before I answer questions, is give you a quick view. And I apologize, but it's going to be PowerPoint. I might try to load it up here. But this is version 2 of TraderVision. And you can see it's a little bit different. And it comes both in, a dark background and light background. Personally, I like a light background. But the difference is that it does a lot of these things automated. You don't have to pick out what kind of a candle signal it is. You don't have to pick out what kind of a pattern that the chart has put up. It goes ahead and scans and captures all that information for you. So you've got that. It eliminates a lot of work. We're also working on getting it to identify the next earning report. The problem is a lot of those things aren't reported too far ahead of time. The other thing that really is an improvement, in my opinion, is that you can grade your own discipline on the trade. You can list the mistakes that you've made, and you can identify your emotions, at the time of entry, during, and at the time of exit. And then when you go to the logging and performance piece, you'll be able to circle back and connect the loop of what do I do well, what do I not do well. And the idea is simple: do more of the things you do well and do fewer of the things you don't do well. Let's see if I can't. I don't know how I can. Okay, so we've got a YouTube channel. You can just search for TraderVision 2020. You go to the website, and we have the tutorials page under TraderVision. You can send me an email at ed@TraderVision2020. Not right now, OS, but that I hesitate to make too many claims, but that's where I'm headed. That's where it's going to go. Um, but I'm having trouble with getting out just the version 2 that I'm working on, and version 2 will not scan other than it does the scanning to identify signals and patterns according to my criteria, according to my scan rules. But you'll be able to figure that out, and hopefully version 2.5 or something like that will make it so you can write your own scans. But for now, all it does is it scans the criteria and rules that I put in or that you specify. So when you set up your trading account, you can say, well, the 50-day SMA is what I want to look at the long-term bias, or the 5-day SMA is what I'm going to look at the short-term bias, or you can change that. You could say the 34 EMA or the 8 EMA, whatever you want. Let's see. Let's see if we're living right. Okay. So, and for those of you who don't know, TraderVision has 3 purposes. Doug and myself and Rick put this together. It has three purposes. One is to help you plan your trades better, and 2 is to support you in the management of trades, make the process simpler, and then 3 is to track your trades so that you can then no slash. Ed at TraderVision2020.com. Yeah. So you can also then track your performance, and it's a really sophisticated trade log. So you can attach a bunch of screenshots or a spreadsheet or whatever else you wanted to attach to each trade. You can keep your notes. It will adjust. It will track all the adjustments. So every time I move my stop, it says, on such and such a date you moved your stop, and or maybe you changed the price of a target, or you added a new target. It'll record all that stuff for you. That's really all I wanted to show you tonight, guys, because we're still in development, and the thing is a little bit unstable at the moment, but that's what I wanted to show you for tonight. I'd hoped to do more, but we're just having some trouble with the application. So, do we have any other questions? Oh, Bob, how much does it cost? It's going to be $37 a month. Yes, this is recorded, and it will be posted both to our YouTube channel and to the website. Rich, that's right after I get version 2 out, and I know that there's some people in the room that have been beating me on the head for that for a while. The options version is coming, but is not here now. Okay. No, we did away with the one-time software fee, so it's $37 per month. So that's how we're selling it. It's a software as a service model, subscription, if you will. Let me see if I can find the. Let's close that. go to the website. So if you go to the website and you go to products, TraderVision tutorial, there's all sorts of videos here. There's manuals and quick start guides for version 1. And then we've got all sorts of videos, and then all of our workshops are listed there as well. And I will post this one on there sometime tonight, hopefully. Okay, guys, I'm gonna close off the recording here. Just one moment. Yeah, okay, thanks for coming, guys. I appreciate your time. Those 4 stocks are ones that you should look at. The PEI, do check for earnings. I did not check that tonight, and I apologize for that. PEI, Con, Macys, and what was the 4th one? Chesapeake. I don't know, JQ. If you send either send me an email or use the website contact us form. I don't know if we've got a day coming up. I do know that they've got a trial version that's like $14 for the first month. So that would give you, for 50 cents a day, basically, you get a month to look at it. And I will tell you, if you do decide to join, I would strongly recommend that you're on the website or on the chat room every day about 9-10 a.m. Because Rick does his review of, I don't know, 15 charts that he picks out that he thinks are potential trade ideas. And he goes through one of them in depth, including the trade plan. But he goes through the chart and explains all 15 of them. And that 15 is an estimate. Sometimes it's a little more, sometimes it's a little less. What are the 4 stocks? Again, they were PEI, Chesapeake, Macys, and Con. So 3 rounded bottom breakouts and either a pop out of the box or a J hook or a flag. In any case, it is a run up, a consolidation, and now we're breaking out. So I hope that helps everybody. Thank you again so much for coming, and I appreciate your time. The room's open 24 hours a day, but we're mostly in there. I'm sometimes in there in the middle of the night. Don's in there in the middle of the night sometimes. But Steve does his pre-market work at 8:30 a.m. every day Eastern. Rick does his pre-market at 9-10 a.m. and then all day long we're in the room chatting and talking. It's a great room. It's great people, and I'm part of the operation as a coach, and as a partner of TraderVision. But I'm not part owner or anything of that nature. But I'm telling you that it's you won't find any better resources than Rick or Doug. And for that matter, Steve. You have to put up with me to get those 3. That's the downside. But it's a very, very good room. Very active. Very very helpful. Okay, thanks a lot, guys, and I appreciate your time tonight. I'll talk to you later.